Hi, good morning, everybody. Mike Toy here, National Brokerage. I'm joined with Greg Sabala, and today we're going to be talking about policy reviews, and not just policy reviews, but some of the benefits to doing policy reviews and some of the results that you can expect to see on policy reviews. So without further ado, I'm just going to jump right in. We've got a lot of slides to cover today, and every one of them is super exciting. So we're gonna burn through these, and at the end we're gonna field any questions that anybody has, and address those as they come up. So I'm gonna jump right in here. So policy review. What is the value in doing a policy review? Why do we do them? Because they may not sound exciting at first glance. So some of the values of doing them, it opens the door to new opportunities. So as you're out there and you're selling insurance, whether it's life insurance primarily, or health, or P&C, doing some life on the side, doing policy reviews, it opens the door to new sales that maybe you wouldn't have seen otherwise. B, it's easier sales because rather than cold calling or calling on referrals, people you've never talked to, you're dealing with people typically that you already know and that trust your judgment in some way. So they're easier sales there. So you're opening the door to those. And there's never a bad result from doing a policy review. Even when you don't get a sale from the policy review directly, still it results in good rapport with your client. It builds value in you and your business, so they trust you more. So I'll give you an example here, and kind of a far left example. Let's say you do a policy review and it doesn't result in a new sale. They're better off staying where they're at, and you get nothing from it. Still, in their minds now, you're not this pushy sales guy that's just out to get a sale. You're actually looking out for their interest. And that's the worst case scenario. The best case scenario is you do find some better solution for them, and you do make a new sale, and they save money, or they increase coverage, or whatever the case is. So bottom line is that there's never a bad result from doing a policy review. One type of sale that results most often from a policy review is a conversion. A conversion, for those who don't know, it's just when you're looking at a term policy and you convert that term policy into a permanent policy. There's no underwriting involved. That's the beauty of a conversion. So you got somebody with a 10-year term, they're in year 9, and they can't get coverage somewhere else, or their health has changed in the negative. A conversion might be a good option for them, because now they can just convert that policy without any underwriting and get the same rate class that they originally got. They're easy to do. They're about 1 or 2 pages at most. They fly right through because of the fact that there's no underwriting. So good commissions on those. It's good for the client too, because they're getting coverage that they may not have been able to get otherwise. A settlement often, well, I shouldn't say oftentimes, they're not as frequent as a conversion, but settlements are a great opportunity under the right circumstances. And what that is, I'll just quick brief on that. You've got somebody who has a policy that they're going to let lapse. They say, Mr. or Mrs. Agent, I don't really need this policy anymore. I'm just going to let it go. Well, instead of letting it go, it might be possible to do a life settlement. That is where, more or less, they sell the policy. There's a lot of factors involved. We're going to dive into some of those details here in a moment. But that's something to be aware of that I would say 9 out of 10 agents don't know about. So understanding them just on a simple basis will set you apart from everybody else. And then last bullet point here, options to life insurance. Does your client still have the old coverage? If they do, what kind of coverage is it? Is it just plain life insurance, or does it have any living benefit riders, chronic illness riders, critical illness riders? Are there any, look at the type of coverage they have, because it could be possible that when you do a policy review and you look at their coverage, you might find something that's similar price, and you might think to yourself, I don't see the point in doing this. And they might think the same thing. However, if you look at the type of coverage, it is very possible that the new type of life insurance is going to be better than their old type of life insurance. So that's something to look at too. I'm going to go forward here to the next slide. Simplification of the life insurance process equals more sales. If you make it sound complicated, it is complicated. So we always strive to keep it simple and make it sound simple. That takes out all the hesitation of the process when people understand it on a simple basis. Simple means different things to different people. Simple can mean Easy to understand. Simple can mean an easy process, such as, okay, great, Mr. Agent, Mrs. Agent, you showed me the quote. Now, where do we go from here? How do I do the application? Do I need to sign a whole bunch of forms? That sounds complicated. How can we make this simpler? So finding ways to make the process simple, finding ways to do e-sign or e-apps, that is one way to make it simple. That dovetails right into the next bullet point here, which is NBGO. So as an agent, how do you keep it simple? How do we keep it simple for you? How do we avoid those 40-page applications that are different for every product and every carrier out there? Use NBGO. That's our application team. So you run the quote on the site, click submit, and then our application team will call your client on your behalf and do the application over the phone. It's much simpler for you. It's much simpler for them. And after they take the application, they send out a DocuSign to be e-signed, which is simpler again for everybody. So help keep that process simple for you and for them by using NBGO. And one thing I'll point out before I go to the next slide is, as far as quoting, going from the quote to the application, one thing that we see, a lot of the most successful agents out there, they don't wait between showing the quote and submitting the app. They do it right at the time. So I'm sitting with you as a client, we're talking about life insurance. I run the quote. I say, how does this quote look, Mr. Client? Oh, yeah, okay, that looks good. Don't do what a lot of people do, which is say, okay, great, you go ahead and think about it, and I'll call you next week, and we'll see how it goes. No, just run the quote, submit it right then, let them know, hey, someone's going to reach out to you. They're going to do the app over the phone with you, and we'll go from there. So, it's a little bit bold to do it that way, but sometimes you have to be bold. That is what the most successful agents do, and it works. So just wanted to point that out. That being said, I'm going to turn it over here to Greg, and he's going to go on the next slide.
Oh, thanks, Mike. So in backing up on what Mike had just mentioned, is a lot of the agents, it is a bold move to go straight to the sale, but it's also the logical move. The client's made the decision. It's fresh in their mind because you've discussed the sales points to it. Now you're just taking it to conclusion, and basically that is our app team giving them a call. Seamless, easy, done. Now the process that is otherwise known as really a pain, it isn't a painful process, and they're going to be more a consumer for life with you because you are doing it different than the typical industry does it. So with all that said, let all the clients know the different options. I'm going to really go through quickly on this one particular slide, so I want to get into some of the teeth on the next slides. But with it said is, does the client, are they looking for longer guarantees, more cash accumulation? Possibly they're looking for diversification of retirement and they want to have some cash accumulation. That seems to be the real in vogue thing. So know that it's available. It doesn't mean you have to give up one to get the other. There are products that have guarantees and cash accumulation, but oftentimes just knowing what is the hot button for this client, and then we can basically have the illustration and the best carrier to accommodate their needs. Living benefits is obviously the biggest sales point right now. Clients, whether they're millennials or people that are getting closer to retirement, are all concerned with, what if I have a stroke and I can't function? Great, I have this life insurance policy, but heck, I can't work. I can't now even pay my premium for my life insurance policy. What's the purpose of this? Living benefits kind of checks that box. Mentally, it's peace of mind for the client to know that, hey, if something does happen to me, whether I'm young or older, I now get to capitalize on my benefit, on my death benefit, with the living benefits that it has. So it's a really positive, a really popular concept, but just keep in mind, it comes with term products and permanent products. Just call your rep and we can walk you through more of it. Laddering is something that is done. It seems like agents either do it or don't. And one thing I'd highly recommend is taking a look at it. It's basically just utilizing multiple policies so that the client doesn't have to come back to you 5 times. So in other words, they say, well, now I've got young children, and that's going to have, that's going to be a factor for me for the next 10 years. And then the next stage of they're going to college, so I still have, a need for a higher death benefit. We can ladder not only a permanent plan with term, but just utilizing multiple plans at one time. Oftentimes is a great situation for the client, and it makes it more palatable to them because they don't have to make a decision down the road. It's going to make it easier. So 10 years from now, that term goes away, and now I have my permanent plan that I have cash accumulation and living benefits that benefits the applicant themselves. So again, as their needs change, the policy's already designed that way day one to either fall off or be converted at that point. The one option that we don't utilize enough, and we have agents that quite frankly flourish on this, and in 2018 and early in 2019, we're just seeing a floodgate of applications coming in, and that is with the life settlements. And I think the biggest thing is there's a lot of misconceptions. So we're going to kind of hit upon that in more details, is how to identify a good candidate for life settlements. Life settlements is basically, the definition of it is just a sale of life insurance policy for an amount that's in excess of the policy's cash surrender value. So basically, whatever you currently have, you'll be in a better financial position than if you just surrendered it. Now, with that said, a lot of life insurance policies, there's a preconceived notion oftentimes of, hey, a settlement, it's not a bad thing, but I just don't understand what it does. Therefore, since I don't understand, I'm not going to make the decision to do it. It is a good way to accommodate your clients that are older age and provide flexibility that they don't otherwise have. We're going to go through some more details and some case examples of that. But one thing about a settlement that we've seen is it is a very unique thing to discuss with your client. And as it's noted on the bottom of this slide, it is also your fiduciary responsibility. We can't avoid this. This is an opportunity for your client. And if you don't bring it up, that can be deemed, if the client finds out about it later and says, hey, wait a minute, I let a policy lapse, and you didn't give me the actual education to know that I could have sold it and made money, and I let a policy lapse. That could open the door to litigation against an agent that did not provide them as an option. So it's one of those big things that you want to make sure, one, you're covering your bases. You are discussing it. But I think it's a very good conversation piece to have, because not many people are talking about it. It really makes you a difference maker in the industry and proficient in not only life insurance, but the settlements that can be sold on a life insurance policy. One thing that on the quote from the London Business School is, they collectively received, or talking about the Americans that sold their unwanted life insurance policies, they collectively received 4 times the amount they would have received if they just would have surrendered the policies. That's a very big number. That's a real number that not only affects your clients and provides flexibilities for them, but also provides opportunities for you as a writing agent. When is it appropriate to write a life settlement? Policy is too expensive for the client. The client's overinsured. Medical needs outweigh the benefit. Hey, I need cash. I don't need this death benefit. I'm fighting cancer. I'm fighting what have you, and I can fight it, and I am going to win the battle, but dang, I can't afford the premium. This is an opportunity to not only, hey, quit paying the premium, now you can use the proceeds from the settlement to help fund your medical bills. Beneficiaries, unfortunately, die prior to they predeceased their parents. So there's no need for the death benefit anymore. They were funding a life insurance policy for Junior, but Junior unfortunately passed away. Now they don't have a need. So they just want to let the policy lapse. They have little to no interest in the policy. This is an opportunity to get them more money for that policy. Key man policies. Boy, this is one that we have a few agents that are just making a killing on it. There's a lot of key man policies that are no longer needed. Oftentimes they're on key employees that are older age and they're getting closer to retirement, and that's the reason they're now sold their company away, so they no longer need the key man policy. And that has been a hotbed, because now we're looking at converting typical term policies, taking advantage of the conversion comp, and doing a life settlement. It's a win-win for the agent and the client. And when you bring this up to them, it's like found money. They didn't even know it existed. They always thought it was just a liability to pay for the life insurance, knowing that they may, that they're probably going to outlive it. But this opens a door that was otherwise closed. Replacing existing insurance with a superior life insurance option. Oftentimes, a 1035 isn't enough money to make it that secondary option better. Prime example: we had a case where the client was preferred non-tobacco when they originally wrote a case. They now are table rated, so they had some health concerns, but they have more of an interest in some of the cash accumulation that they can take advantage of, and the more robust product offering that we have with our carriers today. They couldn't afford it because the 1035 didn't bring the premium down well enough to even capitalize on this. We were able to settle a policy, use that money to do an initial funding, and brought it. It was still a little bit more expensive, but not drastically more expensive, and made a sale. So from the agent's perspective, they had a settlement sale, and then they also had a life insurance sale that otherwise wasn't going to be available without those proceeds from the settlement. So it's a very good option, and it's something we always want to keep it in consideration.
Good points. Thanks, Greg. All right, so real quick, just want to talk about who qualifies. Who would qualify for a life settlement out there? These are general rules of thumb. These aren't written in stone or anything. So, if you think you've got an opportunity, definitely talk to your rep, and we'll go over some of the finer points. But as a rule of thumb, who qualifies? Insured would typically be 65 or older, preferably 70 or older. The types of policies would be a UL or an IUL or a whole life or a term with conversion options. And the reason I point that out is because if you put yourself in the shoes of the person who is buying the policy, what are you looking for? Do you want to buy a term policy with no conversion options that's going to expire in 5 years? No, that's not a very good investment. So just if you kind of think of it from that mindset, it helps you understand who wouldn't qualify. So those are some of the types of policies that would make good settlement opportunities. Face amount. Typically, you want it to be $100,000 in face or more. I would say the majority of life settlements are well above that. Again, not written in stone. There's a lot of factors to look at, cash value and convertibility options, etc. But typically, $100,000 or more. And one of the big ones here, like Greg was just saying, is that the good qualifying opportunities are the ones where their health has gotten worse than it was when they initially got the policy. So, like his example, they got a policy and it was preferred non-tobacco. Now they're table F, something like that. That is a situation where they may not be able to get coverage elsewhere, or they may have to do a conversion, something like that. So those are some of the general rules of thumb. Now, what's in it for the client? This is one really to pay attention to. All of the slides are really important, but this one in particular, because if you understand what's in it for the client, it will help you talk about it to them in a way that they are now paying attention and that they understand. So just to go over a few bullet points here. Lump sum of cash. They've got a policy, they sell the policy, they get a lot of cash for it. They probably never even dreamed that they could get anything for it. So you will be a hero. That should get their attention right off the bat. Secondary to that, they're no longer paying premiums. So they've got this policy, they've been paying X amount per month or per year for X amount of time. They no longer have to do that. So that is a big benefit to them. Oftentimes, superior funding option for new life insurance coverage. I'm going to move to the next one here. This one will be sure to ring home for them. Money to spend on other things. Think of all the things money can buy. Long-term care, chances are if they've got a health situation that they're dealing with now, they might have medical bills, long-term care expenses, that type of thing. Or maybe they just want to go on vacation or give the money away to charity or their kids. Think of all the things you can do with money these days. Couple last things that I'll point out. 55% of baby boomers believe that they will end up having to work past age 65. So that's something to be aware of. And then last but not least, receiving cash for policies that they otherwise would have let lapse. That kind of ties into that first bullet point. So I think, frankly, those two bullet points, the very first one and the very last one, just pointing that out to a client should bring the point home fairly well. Here's a policy. You didn't want it anymore. You didn't think you needed it. You thought you were just going to give it away. Guess what? Now you might get something for it.
Prior to me jumping to the next, I'm just going to show 3 quick past cases that we've done in the last 6 months. Before I jump into that, though, I do want to kind of hit upon it's becoming more mainstream. So for those of you that watch TV, you'll see it quite often. Coventry's, for example, one of the funders that we have, and they're doing a lot of national advertising, just basically stating you can get cash for your life insurance policy, and they're touting it as much. And that's basically some of the funders that we utilize. And there's a great deal of funders out there in the marketplace, but it's something that clients are just now getting hit with with commercials. It's not a foreign concept to them, but again, they oftentimes have a misconception. Oh, I'm 30 years old, I can sell my policy. Obviously not the case. It's for, like Mike had just hit upon, a very unique and defined clientele, if you will. So with that said, I'll give you a few examples of what we've actually ran through with our within National Brokerage. This was a pretty nice one. So basically, the client had some significant health issues since they wrote the policy, and they couldn't afford to pay the premium. So basically, this was just one that they were just going to ditch the policy and call it good. We were able to, on a universal life, able to get a settlement value of $32,000, which is quite high. I mean, for a $100,000 policy, obviously there's a great deal of health concerns. But with that said, this is something the client was going to get zero for before. So looked pretty dang good. Again, the agent brought it to our attention, just asking if there's any other options. And we were looking more for a life insurance policy than anything else. And what we turned out to find is that this was the better viable option. So again, bring the different people to us and we can take a look at it. Age 67, by definition, is kind of on that bubble. We typically want 70 above. We can do 65 and above, but it's on that bubble. But because of the health concerns, it was attractive enough to the funders, and we were able to get a good offer. So just keep that in mind. Is when in doubt, bring the opportunity for the marketing rep here, and we can tell you, hey, this is a good option, or we just don't think this has teeth. Another example here, and this is a typical agent we'll see, is age 75, 15-year term. It was rather unique. They had the conversion privilege still. So again, that's something to keep in mind. It has to be convertible when it's a term policy. But it was $1 million policy that we were able to convert. The client was just going to let the term policy lapse. They no longer had a need for coverage, so they weren't interested in doing any type of conversion personally. With that said, we were able to convert it, get a new sale for our agent on the conversion sale, and then also on the settlement was $107,000 to the client. Client was ecstatic, obviously, and we actually got 2 referrals from this particular client to our agent. We weren't able to make 2 more settlement sales, but we did get 1 life insurance sale out of that because the client was a little bit underinsured on a policy. So, good news travels fast, and when a client has a good experience with things, they're obviously going to tell people. And again, who does a 75-year-old person talk to? Probably their friends and family, and there's a lot of people at similar age groups that made it a good opportunity for our agents. So again, good possibility of doing a policy review, if you will, and finding a settlement option. Last example is a 84-year-old female. The premiums were increasing every year. I didn't do this one personally, but the premiums were increasing every year, and they were just considered lapsing the policy. So basically, they were getting where they could no longer afford the policy. So instead of doing that, we were able to get them a settlement. The current cash value was only $6,700. So if they would have just let it lapse, the client would have had $6,700 in their pocket. Conversely, after the settlement, as you can imagine, good opportunity. It was $1.75 million in life settlement value. Now, when that happens and an agent looks at that, okay, great, I got $1.7 million going to the client. That isn't what the client actually necessarily needed as well. There's different sales that could come into that. If you're, money manager or something of that nature, obviously you can use the money there. 2, annuities, taking advantage of putting a client into a product that they feel comfortable with as well. You want to be there for that side, of course, as well. So you're not only getting the settlement sale, you're obviously getting what doors does that open for the client that you can have another conversation with them. With all that said, I just wanted to give you a quick visual of what the process is to a life settlement. There's information gathering, for the insurance that they currently have, and a medical background. We're not doing a medical exam, but we are going to look at the APS records. So you submit to the providers. The providers then come up with an offer. The client either accepts or declines the offer. If they accept it, then there's a contract made. The investor becomes the owner and beneficiary, and then the client receives the funds. So we put a 4 to 12 week process. Typically, a big chunk of that process is just getting the medical records so that we can do what we need to do with the funders. Not all funders are made equal. So basically, some funders like to excel in certain life expectancy. So they actually run a life expectancy on the client of when they anticipate the person passing away. Sounds morbid, but it is the industry that they're in. And with that, that's going to narrow the scope or expand the scope of who the funders that are going to be interested. Face amount is another nuance. Again, all this is done behind the scenes with an expert that this is what they do on a daily basis. And we're not asking you to know all the details to it. Just basically know that there's our options and that you can unveil those opportunities for your client.
All right. Benefits to you. This is something that that perhaps I can't overemphasize. So I'm gonna go over some of the benefits to you as the agent to find these opportunities. And before I do, one thing I'll point out, you might be thinking, I don't have these type of opportunities. This all sounds fantastic, but these aren't the type of people I work with. I don't know anybody. I would change that way of thinking. I guarantee that you do have opportunities like this. We all do. We all know someone out there who might be a good candidate. And once you start looking even a little bit, you'll start to see them. You'll start to find them in ways that you didn't even know that they were there.
And one of the common ones there that I think Mike's probably kind of hitting upon, even one of the agents that wrote one of those settlements that we just discussed is a younger agent, kind of newer in the industry, is in his mid-30s. Clientele is a little bit on the younger, more youthful side as well. I think, his typical client's 50 or younger. What we did, though, is we opened the eyes of the applicant he did have to their parents. And so basically, the person that he had done business with, it was the parents of that individual that they actually did the initial review for the settlement. So, to Mike's point, you're not limited to who you market to. Open their eyes, and they might be looking at their family and other situations that they know of, and expands your marketing horizon. So, sorry for interrupting.
No, it's okay. That's a good point. Thanks for pointing that out. So, some of the benefits to you as the agent. Number one, commissions. You get a commission. Excuse me. You'll get a commission on the life settlement. So, not only are you building value in yourself, you're being compensated for doing so. Also, the policy stays in force, which helps your reputation with carriers and agents and the industry. So keeping a policy in force is good for you. If it does result in a term conversion, guess what? You're compensated on that too. So it really is kind of the gift that keeps on giving in a lot of ways. So yes, you get commission on the actual life settlement. And yes, you also get commission on the term conversion. So in that case, you would get paid twice. Better funding options, which opens the doors to additional life and annuity sales. Kind of like what Greg was just saying. So just talking about these, just looking at these, you may not see an initial benefit the first time, but they might know someone, maybe their parents, who knows. This kind of thing sort of spreads with time. So this will open the door to other opportunities. And maybe the other opportunities are just regular life sales, who knows. But this helps your reputation, it builds value in you and your business, which is good now and in the long term. A couple of points also to think about. By 2020, 70 plus million Americans will be age 65, will be at least age 65. Let that sink in for a second. Remember when 2020 seemed like it was a lifetime away? It's not anymore. It's less than a year away. That's less than 1 year from now. 70 million Americans will be 65 or older. There are opportunities there. That is in every state, every city. We all know them. So keep that statistic in mind. You start falling into that trap of not thinking that you have good opportunities at your disposal. And then also, lastly, happy clients. You're the agent now that open their eyes to these opportunities. So forgetting about the tangible benefits of, getting commission or getting commission twice and the clients making money at the same time. Think about what that's like if your client was just going to let their policy go, and now all of a sudden you, as their agent, looking out for their interests, brought them this deal where they would have probably taken a $5 gift card as opposed to just letting it lapse if you mentioned it to them. Now they're looking at thousands of dollars. You are a hero that will go down in their memory forever, and they will spread that message to everybody who asks. So that is, you can't hardly put a value on that. So that's something to be aware of too.
You definitely want to be unique, and that's one thing that Mike's hitting upon is you want to be the one that brings them to the forefront and to that opportunity. So definitely keep that in mind. One thing, when Mike's saying it's a unique opportunity, I've been here, going on 22 years at National Brokerage. It's been a big part of my life, obviously, and I can honestly say, from a client's perspective, from a client's experience, we don't receive much from a client. And I would like to think we're pretty dang good at what we do on the life insurance and annuity front. We do a lot of good work. We fight hard for you guys and for your clients. but I can tell you we've received as a company fruit baskets and different things of that nature from people that have had a settlement more than we have for people that we've done life insurance. And we've done a fraction of settlements, but we've done a ton of life insurance. It's just a unique thing people don't think about. And they really, to Mike's point, you're just a godsend that you were able to find this option that they didn't even know was out there. And so it's something I know we're really hammering upon it, but I think when you do it, you'll be very pleased and very excited about it as well. Because again, we don't receive that type of stuff very often. And when we have a great deal of time, it's from people that were excited about getting a settlement and us opening their eyes to that opportunity. One thing about misconceptions out there is, there's no more buyers or funders. That's actually false. There's, 30 plus active buyers currently, and insurance, another thing that we always hear, well, they have to be terminally ill in order to do a settlement. Again, false. The life expectancies can be up to 20 years to make that work. So that's, again, bring the opportunities for us. We're not going to set a misconception either. We're not going to overpromise and underdeliver. We're probably going to do just the opposite. But again, bring those opportunities to your reps so you can discuss it. And one thing that we actually heard, and I just put it on the slide, is just, it's illegal now. Well, actually, that's very false. It's regulated in 43 states. So basically, real quickly, I won't go through each state or anything of that nature, but you can kind of see these are the different regulations. They have how long the waiting period has to be, on the settlement law that they have out there as well. It's a very regulated industry. It's not the wild, wild west as it was when it was initially introduced. And that's what some people recall, but that's obviously not the case anymore. So again, discuss life settlements with your rep. And one thing about it, all of this that we're discussing is how in the heck are we going to get in front of your client to even have these conversations? We do have some availability for some technological tools for you as well. And I'll let Mike hit upon that in closing to our webcast.
Thanks, Greg. So proactive marketing. All that really means, it doesn't have to be a really complicated thing. You don't have to go out and hire an executive marketer to do this for you. It just means staying in front of your clients. So what does that mean? That it could be something as simple as just going into your back office OES system that we give you and turning on the auto email campaign. That means your clients are going to get an email to say happy birthday on their birthday. It'll say, Merry Christmas at Christmas time. It's just something to stay in front of them. And then we can customize that too. So we can upload different flyers or whatever you have in mind for your client base. So it's just a way to kind of stay in the forefront of their mind when that time comes. If we're being realistic, maybe all your clients don't remember you super thoroughly. Maybe you don't remember them super thoroughly, but they remember of you and you remember of them. This is a way that they'll think when that time comes and they start thinking about life insurance. Oh, I did get an email from that guy. Let me dig that out. Oh, here it is. Let me give him a call. That's why you do it. It's not like you're going to get immediate results sometimes, but sometimes it's a slow burn. Over the course of time, they'll think of you. So that's why you want to do that. And it helps you build that more of a loyal consumer referral base too, because by doing this and staying in front and bringing these good opportunities to them that they're not aware of, they're going to go out and refer you to people that they know. And when someone talks about a similar situation, they're going to say, oh yeah, I have that. And I talked to so-and-so and gosh, here's what they did for me. Wasn't that great? Here's his number. So that's why you do it. You don't always see the tangible benefits right away, but those are some of the benefits that happen outside of your sphere that goes on. And then second to that, most people out there don't specialize in only life insurance. They do other lines too. And so it grows exponentially from there. So then they start thinking about you for other health or auto or whatever it is that you specialize in. And maybe they'll call you for lines that you hadn't even looked at selling before, but now these opportunities are presenting themselves. So we can help you with that proactive marketing, as I stated earlier. So if you're not sure how to set that up, it's really easy. Call your marketing rep. We'll help you do it. It'll probably take us 5 minutes or less. If you've got all your database on a Excel file or PDF or whatever you have, that's fine. We can convert it for you and put it in there and just basically turn on the auto email. So stay tuned. In future webcasts, we're going to talk a little bit more in depth about how to do more of that type of marketing and some of the benefits to doing social media marketing and those type of things. But for now, that concludes this webcast. So just want to thank everybody who joined today. And if you haven't talked to a rep yet about opportunities like this, definitely encourage you to call your rep and talk about it. Maybe you don't even know where to begin looking. Again, call your rep. We'll look at it with you. We can look at your database and say, oh, here's an opportunity right here that I'll bet a lot of people wouldn't have even seen. So call your marketing rep. If you haven't followed us yet on our YouTube channel, I'd encourage you to go to the YouTube channel and subscribe. You can check out this webcast later or previous webcasts, as well as other sales tips and underwriting tips and just little things that can help you. So I just want to thank everybody again, and hope everybody has a great day.
Thank you very much.